So I thought today I'd just go over some positions I'm in and one position I'm looking at opening next week. I'm doing this to journal for myself as I think it'll help me with my trading. But if anybody can get any information from it that, they're going to use in their own trading, I'm glad to have helped. So just the first position I'm looking at is AUDUSD. My current position I opened, I believe, on this candle on the 22nd of February. As you can see, we've sort of got this zone here that's recently been acting as, I guess, there we are. We've got this zone here that sort of acted as a base. It's broken through, come back down, retested, bounced off. It's come back. It's found support here. It's broken through. And what I believe is we're going to see this now act as resistance. My entry was really just Fibonacci, nothing crazy with this key area, Fibonacci drawn out. We've come back here to the golden zone. We've closed, inside it, entered into a short. My stop loss is right here, but I'm considering moving it here when we get when we open for the week. And my take profit is currently down here between the 50 extension and the 38 extension, and this major swing low here. So if we have a look at the latest COT filings, we can see that with non-commercials, 72% of their positions are short and 27% are longs. And then if we come over to commercials, these are people who are often contrarian because their business already reflects the sentiment that they have, and this is sort of their way of hedging. That's a very basic explanation. It's a little bit more complicated than that. But we can see that 76% of them are long and 23% of them are short. So we have the people who are often going with price, shorting, and the people who are often going against price, going long. So this has sort of shown me that we can definitely see some potential of AUD USD falling even further now that we have, hedge funds and banks mostly on our side. So I'm going to keep monitoring this trade into the coming weeks. And unless we see any major changes, which we very well might with these upcoming news events, I'm going to stay in this position and maybe even get rid of my take profit and just move stop loss as we go down and create new highs. So another position I currently have open is a short position on corn. I actually had another one open earlier this year. Early this year I had this position open. Short on corn, I wish I had held it for longer, but that's a nice win. But if we come here, my technical reasons for entering this trade was really just Fibonacci again. And this might have been a pretty early entry, and if I get stopped out, which I might, I'm going to definitely be looking to re-enter short. And the reason for that is, if we have a look at the COT filings, we can see that non-commercial, so people who are going with price, 64% of them are short and 35% long. And then commercials, who are usually going against price, 61% of them are long and 38% are short. Now, we have had a slight increase in net positions this week, which net positions are just long positions minus shorts. So we've actually seen an overall increase of 33,000 longs, but this could very well just be profit taking by institutions who, might have done some profit taking here and got into more positions here, ridden it all the way down here, and might just be taking profit. So we could see maybe a larger pullback, maybe up to here, and if that happens, I'm more than willing to get back into another short on corn. Fundamentally, right now there's an overabundance of supply and a severe lack of demand. The overabundance of supply is coming from the fact that acreage in the USA, which I believe is the largest corn producer in the world, has actually increased by around 10%. Demand by corn in the USA has actually decreased. The largest consumer of corn in the USA is actually cattle farmers, because corn is such an effective way to bulk cattle cheaply. They've actually been cutting herd sizes the past few years, and cattle herd sizes in the USA are actually down to levels we haven't seen since the 50s. This has been due to a drought that's happened that's made keeping lots of cattle actually quite expensive. So they've cut down herd sizes, which has decreased demand for corn, while supply has been increasing at the same time. And also with supply, Brazil has actually broken records with their corn exports, and Ukrainian corn exports have picked back up to, well, all Ukrainian exports have picked back up to what they were before the Russian invasion. So we've got lots of factors contributing to an increase of supply and factors actually bringing down demand. So, this is really bad for corn. And as you can see, we really haven't seen corn increase steadily since the conflict in Ukraine, which was around February. Yeah, so around here, this is where the conflict happened, and that's when we really saw corn increase. And ever since then, it's just been, a downtrend. And I'm going to keep writing this down, entering short positions and closing them, until we actually see a change in the fundamentals, or I start to see short positions go below 60%. So a position I'm actually looking at getting into next week is a long position on West Texas oil, or really, oil overall. We can see with the COT data, we're 65% long and 34% short with non-commercials, and we're sort of hovering around even for commercials. I wouldn't really consider it to be a bullish or bearish signal until we've crossed the 60%. What could be causing this is what's happening in the Middle East right now with, for a start, the Israeli-Hamas conflict. While Israel itself isn't really a big player in the oil industry, the fact that Hamas has links to Iran is something that people should be considering. The US might try to use this as an excuse to increase their embargo against Iran, which is their biggest rival in the Middle East. And that's sort of happening as well with the conflict against the Houthis. They're also backed by Iran, and so that's another reason the US and other countries might seek to might seem to strengthen their embargoes against Iran. And also with the Houthi conflict, there's also a risk of it spilling over into, the Red Sea, which is where most oil comes through, and that's definitely going to increase the price of oil. On the technical side, I'm, really, really interested because sort of to mid-late last year, we saw this $79 a barrel psychological level act as really important support. It's come broken through and is now acting as really strong resistance, and we've just broken through it. So next week, I'm probably going to get long as soon as the market opens. My stop loss below this consolidation here, and I'm not going to use a take profit. I'd like to ride this because, if we see some peace talks happen, we can definitely see oil drop again maybe. But if these fall through, oil will probably fly, and I'm hoping we can see oil hit here around this sort of swing high here at the $90 level, and that's probably where I'll be looking to take profit. So I hope anybody who's watching maybe got themselves a bit more information. I don't think there's really many people on YouTube, or many large people on YouTube, who use COT data, and there's large people on YouTube who use fundamentals as well. So I can't really claim to be different in that way. But yeah, I hope anybody who wanted just a basic technical, fundamental, and COT analysis of these instruments, got what they were looking for. I personally think that with trading, people love to overcomplicate it. And really just its simplicity and consistency